We are staring at one of the most significant compression patterns in the entire crypto market right now. Near Protocol has been quietly coiling inside a massive 2-year symmetrical triangle on the high timeframe charts. We have a convergence of a descending resistance line dating back to the all-time highs of 2022, meeting a rising support trend line that has held since 2020. Price is currently wedged tight into the apex. When these structures break, they rarely do it softly. They explode. But here's the catch. We are sitting right on the edge of invalidation. The fundamental data regarding AI integration suggests one direction, but the chart is saying caution. Today, I'm going to show you exactly why I'm bidding this fear, where my hard stop loss is to protect my capital, and the specific $19 target I'm eyeing for the next leg up. Let's look at where we actually are. As of this recording, NEAR is trading around $1.70. If you look at the last 4 weeks of price action, it feels heavy. It feels slow. I know the sentiment out there. People are bored, or worse, they are scared because NEAR has been lagging behind some of the high-flying layer 1s like Ethereum, Solana, or SUI. But purely from a contrarian perspective, this is exactly the kind of environment I look for. You do not get efficient entries when everyone is celebrating on Twitter. You get them when the market is uncertain. We are seeing price action reject off a local descending trend line, pushing us down toward a critical support zone. However, if you zoom out, the fundamental landscape has shifted aggressively toward a narrative that NEAR is uniquely positioned to lead, the intersection of artificial intelligence and blockchain. Before we open up the charts and look at the moving averages, you need to understand the catalyst that could force this breakout. We need to talk about what is actually happening under the hood, because the ghost chain narrative simply does not match the data. First, look at the integration with CowSwap. This is massive. CowSwap has integrated NEAR Intense as its primary cross-chain provider. Why does this matter? Because we are moving toward an intent-centric future in DeFi, where you just say what you want to do, and the chain handles the complex execution. By connecting these two infrastructure giants, NEAR is positioning itself as the settlement layer for complex, cross-chain DeFi actions. Speaking of DeFi, navigating these new intent-based protocols and cross-chain swaps can be complex if you do not have a system. If you want a complete breakdown of how to navigate these platforms, manage liquidity, and secure your assets, I have compiled all these tactics in my DeFi guide. It is available in the pinned comment for just $4.99. It cuts through the noise and gives you the step-by-step frameworks I use daily. Now, back to the ecosystem. The biggest narrative here is the user-owned AI push. NEAR has launched the NEAR AI Cloud and private chat. We are seeing real products where data is processed in a sealed, isolated environment using confidential computing. This is not just a buzzword. It is a direct competitor to Web 2 AI, but with privacy. And we are already seeing real-world utility with Trav AI, a travel platform combining AI automation with blockchain settlement. The market is noticing. Look at the developer activity. Sentiment data shows NEAR leading developer activity among AI and big data projects, sitting right up there with Internet Computer and Chainlink. And purely on user numbers, the data from Token Terminal and CryptoRank is undeniable. NEAR is consistently in the top 3 for monthly active users, boasting over 42 million active addresses, right behind Solana and BNB Chain. Even the institutional money is positioning. We saw Pantera Capital's investment volume by week, and NEAR is sitting there with over 700 million in weekly volume flow. The fundamentals are painting a picture of a network that is widely used, technically advancing in AI, and backed by smart money. So, why is the price so low? Let's go to the charts.
I'm looking at the 2-week time frame here. This macro view filters out all the daily noise and shows us the real battleground. As I mentioned in the open, we are in a massive symmetrical triangle. The upper orange dotted line represents our resistance, coming down from the $20 all-time high. The lower orange dotted line is our ascending support, originating from the 50-cent lows of October 2020. We are currently trading right near the bottom of this structure. Zooming in a bit, inside this triangle, we have a steeper descending trend line, that is, the orange dashed line on my chart, which has rejected price recently in September and again in November. We are currently trading below this resistance. Now, look at the indicators. It is a mixed bag, which is why we have this opportunity. Price is currently below the 10 and 21 period exponential moving averages, the blue lines. We are also below the 55 and the 100 EMA. This confirms the short-term bearish trend. The Fibonacci RSI is hovering between neutral and oversold, pointing downward.
This tells me momentum is still weak. However, look at the volume profile on the left. The point of control, the price level with the most traded volume, is sitting at $2.25. This is very close to current price. In technical analysis, the point of control often acts like a magnet. If we can reclaim some momentum, price will want to revisit that high-volume node. Let's talk Fibonacci levels, anchored from the December 2024 high of $8.30 down to the recent lows. The 236 retracement level is at $3.15. We have been rejecting from that area since March. The 0.5 level, usually a major target, sits at $5, which coincidentally aligns perfectly with the upper resistance of our symmetrical triangle. Here is my strategy. I'm not telling you what to do, but this is how I'm playing it. I have established a load zone between $1.60 and $2.40. We are currently working inside this zone. I'm accumulating here because the risk-to-reward ratio is favorable. However, I'm not blind to the risks. My invalidation level is a weekly close below $1.30. That is the red dashed line on the chart. If we lose the $1.30 level, it means the macro ascending support has failed and the setup is broken. I would cut my short-term positions there and look to reaccumulate much lower, perhaps around $1. But if this support holds, my take-profit targets are methodical. I'll be scaling out using a trailing stop approach. My first target is $3. Once we hit that, I move my stop loss to my entry. My second target is $5. If we clear that, the symmetrical triangle is broken to the upside and things get fun. Subsequent targets are $7, $12, and my moonbag target is the 1618 extension at $12, and finally, the 2618 extension at $19. So here is the game plan. We are at a decision point. The fundamentals, the AI integration, the massive user base, the intent-based architecture are screaming growth. But the price action is testing the resolve of every holder. The best-case scenario is that the $1.55 support holds, Bitcoin stabilizes, and near reclaims the $2.50 level to break that local downtrend. That triggers the run to $5. The worst-case scenario is a macro market flush that drags near below $1.30. If that happens, I'm out of the trade for the short term, preserving capital to buy back cheaper. I'm playing probabilities, not certainty. I'm betting that the 2-year support line will hold, especially given the strength of the on-chain metrics we just covered. To recap, NEAR is an AI infrastructure play disguised as a struggling Layer 1. The chart is compressing, the user base is growing, and we are sitting at a generationally low support level. I'm placing my bets here with a strict stop loss because the upside potential to $19 outweighs the risk of a drop to $1. If you appreciate this level of data-driven analysis without the hype, make sure to like the video and subscribe to the channel. I post these updates daily. Also, for real-time updates on this trade and others, join my free Telegram group. The link is in the pinned comment. I also covered Tau recently, which has a similar AI narrative structure. You can check that breakdown on the screen right now if you want to compare the setups. Thanks for watching, never financial advice, and I'll see you in the next one.